Going on, so we're going to do another video of just basically going over some charting. So what I'm going to be looking at is Aussie CAD. For example, we'll try and make videos every day and try and get through all the currencies, indices, commodities and so forth, but let's go with Aussie CAD. And yeah, so essentially with Aussie CAD, it's one of those ones where it is been somewhat corrective on the way up, but the nice thing about it is it's still tradable. There is trading opportunities, it's just they don't come as frequently, so it requires a different level of patience when you are looking at these particular types of pairs. So what you would be looking at over here is obviously the area of value, and then you're within this squeeze. So if you are picking a pair like this, you need to have a really good trade thesis to back up what you're looking at. So the obvious thing that draws the attention straight away is that price is squeezing to the upside in this way. So essentially for me, I would either be looking for price at a level of where it could be exhausting, could potentially tap into these areas and then sell off and then give us, you know, the end of that squeeze to then give us the continuation to move lower. In that reason, I wouldn't actually have this pair on immediate watch, but in the case of just identifying the trades that were within here, we'll have a little closer look. So what we could see is if we mark on these areas of interest and we map on the first one over here, second one there, we've got the low here, with the little gap there as well, and so forth. So I would be looking at these areas initially when price reaches those, and then as we go into the 4 hour, we can identify the ranges. So obviously, as you can see, price has already been played out, so we can already see how price has responded, which isn't necessarily a bad thing because we can actually identify where the optimal entries were. So if we are looking at price from this area here, we can see small liquidity above, price left a gap, eventually took it out, and then squeezed and then broke. Came to the downside, didn't follow through, but it then reversed, took out the next point of liquidity, left a bigger gap, and then sold off. Didn't quite reach that low, took out some liquidity, then left continuation, moved up higher, left continuation, came up, then eventually left a bit of a gap there as well, and then eventually came up, and it's just now moving to the upside. So as you can see, it does seem a little bit messy when you do look at it like that, but there is context behind it. It's just prices moving sideways. So when you are in a sideways moving market, you didn't have to price in the fact that we're probably going to get a lot of gaps, near misses, and price is going to be coming up and down, filling those. But again, they are tradable. So if we're looking at the first port of call, you know, we identified this as the area. We had that little bit of liquidity just above, and then we had the bit pointing just above it. So if we look at the first point of action, we can see what did price do when it came down. Well, price tapped into this area, came up, came back down, tapped into it and created a double bottom. So what we can see here is that the long at this point is supported by a double bottom, which did leave a gap here, but with the momentum where it pushed up higher, we understand that this is enough for it to then potentially go up to the next point. So then as we came back up, we then tapped into the area here. There was room to potentially take a short there. However, you are trading against that huge amount of volume there. We do want to see a little bit more exhaustion, or at least a break below there. If we then had something like that, that would be more than enough for us to then see that as a phase 1, phase 2, phase 3 to the downside to then fill that gap, but we didn't get that. What we did get instead was a corrective squeeze. And the interesting thing about this is that obviously we don't know for certain where price is going to be turning around, but we do know that we had a bit of liquidity there. Price then eventually tapped into the liquidity at this point here, and then it started to reject. So that was our point of where we could see the optimal entry. So as we are still on the 4 hour, we can see on the 4 hour, we basically had the 4 hour confirmation candle, then we pushed, and then within here we would have potentially been looking to get short, and we'd be playing it as a minimum to around about that level there. So then if we go into the 1 hour now, understanding where we're positioned, we can then see here on the hourly, okay, great. So what do we have? Well, 4 hour closed here, heavy bodied, which is good. It's supported by a squeeze, which isn't the best price action, but it is signifying that the price could be turning around at this point. And then within here is where we are looking to potentially get short. So remember, we are high up in the run, so we don't need to always necessarily be looking for perfection. We won't always get a 4 hour or 1 hour flag in these areas, but what we do tend to see is that price tends to repeat itself time and time again. So at this point here, we could probably get a little bit lower and refine it because we are high up in the run. It is our first continuation, and I'll just squeeze that. Let's delete that one. Right, so what do we have over here? Well, if we look at it a bit closer, I'll move that out of the way. If we look at it a bit closer, we did have our continuation there. Now, the interesting thing about this is its position there. Why is it interesting? Because this could have developed into continuation to continue moving higher, but the fact of the matter is we broke impulsively, we created this, and that invalidates the trade idea for the continuation to the upside, which makes it even more higher probability. So now that we've identified that we have a good trade in our hands, we can then now start looking for the potential of an entry. So how would we take this? Well, we are on the 15-minute. We're positioned well on the 4 hour because we had a good 4 hour candle. On the hourly, we can see that we are trading through the low, which is now invalidating the idea for the long because we are getting this context of a trade here. So then if we start marking that up, we can then see, okay, let's get a bit closer and see this structure. So there's more than enough candles. It's now retesting the back end of all of that. There's a small bit of liquidity right here, and we're basically just hovering at it. Now, we're not looking for perfection in this area, but it would be nice if it just taps in and sells off. At this point here, there's two ways you could take it. You could essentially wait for price to give you a decent candle where price just breaks above, comes back in, gives you that retrace, and you can get positioned in there, stops above, and you can play the short. In this particular scenario, this is an interesting one because we're squeezing in this nature here. We don't know when this squeeze could end and if it could continue moving back up. We don't know for certain. So in this particular scenario, it's a safe bet to actually get involved either on the break with the stops above or potentially over there, and then just basically get in and just kind of put it above. I would probably still stay with the same stop loss, and if we look at that from either for that closing candle, probably on the next one, we can see, yeah, that's still around about 8 pips. So either way, if you got in there or you got in a bit more refined, I think 10 is more than enough. You could have probably cropped it, but I think because of spreads and stuff, let's just say we went with 10 pips stop loss. You know, we're then trading to the minimum, as we mentioned before, which is of this price pattern, this bigger pattern here, which was that white ray line, which I'll draw on properly in a second. And I'll just remove these and we'll put that on there. We'll measure this up so that we can see exactly okay, so as a minimum we'll be trading it to that 90%. Of course it did go further, but again, we're not trying to look for, you know, to get out over here at the best price possible, 8.9%, let's say. You know, we don't know it's going there. We just know that consistently repeating this process, we're going to be able to make the money. So there we go. We've put our entry, we've now left it, and we can just see that if you left it alone and you let price play out, you would have walked away 5.8% mechanical, and that would have been that. Or you could have probably put 6.6, left it at that and walked away. But more than likely, I'd say the sensible option was probably the 5.8-ish%. I think because it's so close to that inflection point now, I would have probably just moved it there and left it at 5.4 and said, okay, cool, I'm very happy with that due to where it's positioned, and I'll walk away with that. So again, that was just one simple trade idea, and you can see how I broke it down step by step of how we got there. So now let's say that you did miss this trade, right? Or you took the trade, but then it came back up, tagged you out, and then sold off, and it didn't really give you another entry. Well, At this point here, we are still on the 15 minutes, so we do need to go back to the 4 hour. I actually know in the back of my mind where the daily is, but let's just say, for argument's sake, everything is still there. We can see on the 4 hour, we are positioned very high up in the run. Now, what were we doing? We were trading into an inflection point in these areas. So when you do zoom out and you look at it a bit closer, and I'll just quickly go back and get that trade back on. Give me 1 second. Yep. Right. So when you look at it on the 4 hour, it looks a little bit more easier to manage at this point, but you have to also understand that price is going to be moving a lot slower, right? Right now you can see those candles and it's like, yep, I can see it. It's very clear. I understood how the trade was taken. I understand everything. Yeah, but at the same time, there's a psychological side to the patience between where we took the trade on the 2nd of July and you would have got out around about the 4th of July. So you would have been in that trade for roughly 2 days, or call it 3. But the most important thing here is that, you got in around about London session on Tuesday and you got out around about, Friday, end of the day. So it's one of those ones where you have to kind of understand where you are situationally. Are you holding, like if you're holding this trade over the weekend, fair enough, right? You're looking at the bigger move here, but at the same time, we can see, even though we've tapped into these areas here, these are not the most highest value areas that we have. We have price above, we have price above that. We understand that price is moving sideways, it's messy. Sometimes it's better for you to just lock out, take the profit and move away. Now, we're going to repeat this process, and I think this is the nice thing about seeing price like this. So we had that one trade there. Now we've tapped into the low. What's happened once we tapped into the low? So we'll get back to the 1 hour. And we can see here that, okay, we've tapped into this area here. We're looking for further continuation to go to the downside over here. Now this is something that did take me some time to understand, but it makes a huge amount of sense. So we're looking for further continuation here below that low to signify that we're continuing to the downside. We didn't get it. This is where being neutral can really help you. So I'll just zoom over to the 15 and I'll get back to that price action. So what did we see in the same scenario as what we saw up here, where this flag over here failed and then created a small continuation there? What happened here? This flag failed, created a small continuation here. It's the exact same trade, but just on the opposite side of things. And you could have then taken the trade in the same way. You could have taken it on the break, or you could have taken it, I would say the break is probably the better bet trade there anyway. But again, so we're tracking this and we're taking it in the same way. So we would have set our entry there, and had you set the entry, you would have been tagged in, and then price would have then moved higher. It did move for roughly around about 4-ish%. I think, again, with a trade like this, you'd go back to your time frame. I'd say the 4 hour would be suitable just because of what we're seeing here. And you wouldn't want to mismanage that, because we understand that, okay, we've responded from this low, we've rejected, we've now followed through. This hasn't really got a lot of reason for it to continue lower. So you don't need to be aggressive with that trade so far. Once it starts flying and tapping into these areas and you're running around about 8-ish%, at that point there you can start really trailing your stop loss, and you're using the 4 hour here. So it's tapped into that area there. It eventually closed up here roughly around about 9%. I would have probably locked in about half that candle, roughly around about 7.5, or if I wanted to be loose, roughly around about 6% just down there. And then the same situation happens again. What happened? We tapped into the value area here, right? We then tapped in it here, and then we were having continuation, but we didn't get the continuation. How interesting is that, right? But then what happened? So I haven't really looked at how much profit we would have made on that trade, but let's just say borderline, you would have been up in this area around about 10.92. I think aggressively in this area, probably you would have either been loose and walked away with roughly around about 7-ish%, or you would have been aggressive and you would have got out with around about 10. For me, I would have got out for 10 personally, just because of getting into the area. I know that for another 4%, I don't want to leave, 3% on the table, for example. I could use that extra, 3% on 3 different trades or the next trade and probably make more. So we'll go back now to the 1 hour just to identify this continuation that we were looking at. And yeah, so we can see it over here, very clear as day. We were essentially waiting for the continuation in this area, right? Now, what we would have wanted to see is for price to then just come back up and then potentially come here, and then it moved, and then we had a larger flag. We got positioned in here and we continued to move higher, and potentially we would have already been out of that trade, so we would have been well positioned. In fact, we didn't get that. In fact, we got something similar to what we saw twice already, is that price then correctively moved. It then broke to the downside, invalidated that idea because it was very corrective, and then it shot up and then it dropped. Now, was there an entry there? Yes, but again, because you're trading in a more risky territory, because we've just tested it here, you want to be more on the cautious side. So what we're seeing here is that's testing that. We have this little bit of continuation here that failed, it pushed up, and then it pushed back in. After we had that, that was more than enough confirmation that this whole bit of price action is in fact a move to the downside. So we're actually seeing it like this, and then that's your running channel for it to then move to the downside. So then as we had that, let's say there was no trade, we couldn't identify something clean enough that met our trading criteria, so we didn't take a trade. Perhaps on the 4 hour there was a trade, but we're not going to look at that one today. And then what we did have over here is that it was a bit messy. It didn't give us exactly what we wanted. Reason being is we basically had something like this shaping up, and then we would have looked for something like that, and it would have moved, and we could have got positioned in there to go lower. We didn't get that. In fact, price started creating that continuation, then it moved higher, started looking like it was creating something to move higher, then we were getting something a bit steep. We didn't get anything there in the end, and then what happened was we did get something steep, but it just wasn't your atypical type of trade entry. So for that reason, happy to stay out of a trade like that. We didn't get something that met our criteria, so we left it, and then it dropped off. And then at this point here, failed to create the continuation, moved higher, created some small little bit of price action, and then again, it started to look like it was moving higher, and then it dropped off. I think, again, sometimes you have to realize that there's a time and place where you have an edge, and it's very easy to identify trading patterns. Like here, you could have said, oh, what about this trade though? Right? Yeah, sure, there was a trade there where it was kind of tapping into this, retesting all of this. Sure, I mean, don't get me wrong, that is a good trade, but when I zoom out and I go back to the 4 hour, I then have to ask myself, okay, well, where is that really positioned? Well, it's positioned within all of that. So I don't really have as much as an edge when I'm trading in these areas and these areas. When I'm in these areas, like, don't get me wrong, you can still make money, but you may not make as much money. It could just easily develop into a break-even trade, or a very small percentage. But it's very situational. It's very dependent on where we are situated in the month, where our accounts are set. If you only need like 2-3%, then fine. I don't see why a trade like that wouldn't yield 1 or 2 or 3%, but a lot of the time I'm not banking on that trade being the one that gives me 15-20% or whatever. Anyway, so as we can see, we then had this steep price action and it shot to the upside. I'm going to just clear off the charts a little bit here, so I'll mark on that low down there, and I'll move this one back up here. So that's our new high, and then as we're looking at this as the new range, because we've got the bottom of the range there and the top of the range here, I then want to be able to identify within here, as we know it's a sideways moving market and it leaves a lot of gaps, where can I get positioned for the next good trade. So what I can see here now is that price then created this bit of steep price action, came up, tapped into this area, left a mini double top, failed to create that continuation, which we know now because we've studied it enough that when it fails to create a continuation, what do we tend to see? Well, if we get continuation situated below it, that's going to be high probability for it to move, and most likely it will move to the next inflection point or the next point below it, but it might leave a gap, which in this case it did leave a gap, which we're consistently seeing. But the interesting thing about this is when it does leave a gap, usually what we're tending to see now is that we'll get some level of continuation, it will fail, give us the next continuation and move up higher, and then eventually either take out the next high or leave a gap. So this is the interesting part about it. So obviously there was a trade there, right here, and good thing about it is actually we could have taken it on the 1 hour. So let's have a little closer look. So if I put that there, we can then see that obviously we squeezed. Personally, I wouldn't take it as a reduced risk. I would have probably either taken it on the candles within. Candles within. I think these are the better off candles. You could have probably, I would have just had it around about that 18 pips. And then into this point here, I would have had roughly around about 3.4. It then dropped off further to roughly around about 4.7. Yeah, roughly aggressive in those areas because of everything we just spoke about. You would have walked away with anywhere between 4 and 3.5, to be honest. We'll call it 3.5 just because we weren't trying to be aggressive with it. And then we then repeat the process again. So what do we see? We see price squeezing, looking like it's going to sell, doesn't give us anything, and then pushes up. We get this. Let's say it wasn't easy to decipher, there wasn't a proper trade there, and it went, or it took you out for a break even. You know, what we tend to see time and time again is that price is just moving in a very similar way. Now, where do people get caught out? Like we mentioned in here, right? Where's our edge? We don't have the edge there, right? We're in the middle of price action. Sure, you can make some money, but you're in the middle of a corrective moving market. But anyway, going to move on from that, what we do want to see now is where are we? Well, I believe this is real time, and we're sitting at the daily value area, or right here. We've actually taken it out. We do know price leaves loads of gaps, so this is very interesting because we've taken out that high. It's very possible that this now becomes a failed continuation and we see continuation to the downside. So what I'm going to be looking at closely on the hourly is two things. I either want to see if this does something like this and it comes up and then we sell and we move, or something which seems a little bit more probable at this point is what we've already been seeing, is that then this basically hovers, comes down here, does this, creates some sort of continuation, and then we get that, and then we move back up, and then we take advantage of this trade here. So then what that means is we can get in over here, positioned well. Let's say that, you know, the candle's pretty big. Even if you get in with, call it around about 15, 16 pip stop loss, call it 15 there, you know, you're still walking away with around about 3.4 to that point. But then if it does sell off and then drops off and then fills that gap, which again is obviously the trade that you're looking for, but it's not always the case. But let's say, you know, that's the optimal target, anywhere between the full amount of 8% to about 90%, which is around about 6%. And then as the minimum of what you're actually looking for is about 3%, to the bottom of the flag, you've got more than 1% to manage to. It's a decent trade, right? And again, we've tapped into this area here. So what do we know about this? It's a sideways moving market. Where do we know we can get positioned really well? Well, in the areas we just looked at. So by this point, you would have already been, what, from July 25th till now, which is basically August the 18th, you've already run 5.4, 10 to 15, 18, and then here, considering that this is the trade that then runs continuously, you know, you're running around about a good 20%, give or take. So yeah, that basically covers the EuroCAD little session. I hope there was some value in that alone. But you can just see alone that you don't need to constantly get caught up in the middle of these ranges. You can just trade the tops and bottoms, so then wait for the proper value areas. I think one thing, if you are trying to really get to grips with kind of, you know, identifying those trades, you need to get good with identifying your value areas. They don't have to be the value area on the weekly. but the ones where price is highly probable to gravitate towards, once you can identify those areas, you can then look for entries. But the good thing about it is you don't have to take the entry right at the top, because a lot of the time, if you are trying to take these trades right at the top, what do you tend to do? You tend to take a break even or a loss, and then you take it again, and then you start chasing the trade, and then you're out. And then by the time it comes here, you're taking like 2% loss, 3% loss, don't know where you are situated, and you chase the trade so much emotionally, you then miss that trade. That one right there, you miss it, and then it sells off, and then you don't see it till late, and then prices all the way down here, you're feeling FOMO because you lost 4%, and then trade then gives you another trade, and you can't get it because you're trying to go short because you missed out on 4%, comes all the way back up. It's then tapped to these areas, and you're thinking, oh my god, okay, it's probably going to continue higher, let me just take a trade there, stop loss below, I'll probably make my money back here, and then what happens? Sells off, right? Now, I'm not saying that's the scenario, but that's something that can very probably happen if you're in an emotional state. So you want to be ensuring that you are protecting your mindset and your capital, and the best way to do that is by taking the time out to really study price action and really understand how you can take advantage of it. Now, obviously, this current price action doesn't apply to EuroCAD forever, indefinitely, but some of the things that I've mentioned you can apply to all the charts. It's just right now with your Aussie CAD, we're seeing this as a continuously repetitive pattern. I mean, the same thing over here. This is a brilliant trade. What we've got basically this squeeze. After the squeeze, we've got that, which then is very manageable. And then, if you're looking at it from a sense of trading into that low, you get positioned anywhere up in these areas. So even if you got positioned up in here, stops above, even with 40 pips for extra protection. I don't know if you would have been taken out by this news or whatever, but that one just dropped off. That's not something that always happens. But again, anyway, just looking back on this, you can see another trade in there. Large trades, so many trades everywhere. Honestly, you don't have to. This is just one simple way of reading the price action and trading. You can trade loads of different ways inside here, man. Like, just once you can identify the patterns, you can start making the money. You've got a little point there, price push down, gave you an entry there, push down, right? Tapped into the low, failed, retapped into this, came down, then created this larger bit here, left a bit of a gap, sold, created continuation. After the failed continuation, sold, small continuation, sold off, left the larger gap, came back up, retested the liquidity, sold off, continuation, didn't sell off, came back up, ended up corrective, retested that level there, sold off, small continuation, made money, small continuation, no entry, came up, then coming to retest that, left the gap, failed to continue, continuation. It was a little bit messy because we had that large wick, but it did what it had to do, and then you would have got involved, similar to what we saw on the DXY recently. Sold off, another continuation, sold off, came back, took out the liquidity, left a small continuation, sold off sharp, another continuation, sold off, didn't really continue, took out this level just about, and then continued higher. And then I believe that's when we began studying price action as we came in. So again, how interesting is that when you can read the price action, understand what's happening, and then move forward? And you can totally do that too. You just have to take out the time, study the price action, read through it, and yeah, you'll get there. I'll try to release a lot more of these videos because I think these are probably the most helpful ones anyway, where you can just see someone just breaking down the TA, seeing their perspective, how they read it, and yeah, totally. So hope you enjoyed this video. If you haven't already, hit that like, subscribe button, and I will try post some more content. If you have any questions, any comments, drop them below, and yeah, I'll get back to you. Take care.